There we
All
go.
right. We are live, it looks like. Hope everyone's having a great start to their week. My name's Jason Drews. Thanks for joining us as we jump into building your business plan to unlock potential in 2026. We've got a lot to cover today, so I hope you're ready. We're going to jump ahead and go through agenda before we jump into the introductions. Um, we're going to cover, like I said, who we are, who is Granum as well. And then we'll jump into the meat of the presentation, which is on the importance of annual planning and budgeting, and then give you some practical tips and advice on actual going through an annual planning process and what that looks like. So we'll finish it off with some Q&A. But as we go through the webinar today, of course, please feel free to ask questions in the question section in Zoom. We'll try our best to get to those as we're going. But we do have a lot to cover today, so we'll try and incorporate as much as we can. And just some general housekeeping. This presentation will get sent out to everyone from the recording after this, along with a handout. More to come on that handout too. So without further ado, we'll keep jumping along here and get into introductions. So myself, Senior Director of Customer Enablement at LMN, now Granum. I've been with LMN, now Granum, for close to 10 years. And fun fact about myself, a bit of a personal finance budgeting self-induced nerd here when it comes to this kind of stuff. And when I first joined LMN, what kind of drew me to the job was actually helping people with their budgets and incorporating that to build a better business. And it was just something that I thought would be really cool and fun for myself at least. And so still doing this 10 years later, it's pretty cool and humbling. So I'm joined by Stephen and Noe. Stephen, I'll let you introduce yourself.
Yes, hi there. Also a fun fact, you were known as Captain America, for those that used to use the support system. But yes, Steve Bennett, Director of Customer Success here at LMN. I've been with LMN and Granum now for 4 years, so not as long as the nine. Fun fact about me is that I probably spent more days traveling in 2025 than I did at home, and have been anointed the road warrior internally. But love being able to travel and connect with customers like Noe, out in the field at industry events and sometimes at their own sites. So yeah, happy to be here today. And yeah, with
Awesome.
Noe next.
Awesome. Thanks, Stephen. My name is Noe Loarca, right outside of DC. We've had Avanza Landscaping for about 13 years. I've been an Element customer for going on 5 years. We do a little bit of residential and commercial. We do design, build, and maintenance. So being able to do all of this together and being able to join them is really awesome. Super excited to be here today.
Awesome. Thanks. All right, and about who we are. So we are LMN by Granum. If you haven't heard of us before, I know there's a lot of folks on here that are not LMN customers. We're experts in helping landscapers unlock their potential. Your success is our shared mission. And LMN is a business management software. So, we have help with everything from CRM, budgeting and estimating, which we'll talk about today, and everything from there to taking payments and reporting. So no matter who you speak with at Granum, like I mentioned, your success is our success, and we try to build a partnership around that and really try to help you succeed. So hopefully in any sort of interaction that you have with our team, you'll see that come through. Now, why we're here today, I think we're going to throw a quick poll into the audience to kind of kick us off. Where are you today with your 2026 budget and planning? Have you started yet? Are you just getting into it, waiting for the holidays? Are you done? Let's see. As that's going through, Noe, I'll throw it over to you. Maybe if you want to walk us through, where are you? When do you normally get started? Anything you want to share there?
Sure. I mean, it's been a big change for us. We'll talk about it a little bit later on, but having the right bookkeeper and getting just having your books in order. So this year we started a lot earlier in terms of tracking what we were doing, dividing out our maintenance versus design build, really looking at what was overhead versus our direct cost. And so we started planning for our budget in November. And right now, I'm looking at what a lot of the options are. So have a detailed budget, but not actively tracking against it yet. So that's exactly where we are. I think November is probably one of the best times to be set up for the following year. I know that's some folks can get it a little bit earlier, but it's never too late to get started.
That's awesome. It seems like there's quite the mix in chat there too. There's the results. So a lot of folks waiting for maybe the year to finish. They haven't started yet. Other folks, biggest one, 38% have revenue targets, but no detailed budget. So good that there's some progress going there. So we'll jump into it. Like, why are we here? I feel like I'm preaching to the choir with this slide. Running a growing business is tough. Especially owner operator, there's a lot that goes into running a landscape business, especially finding the right customers, price competition, there can be a low barrier to entry. It's hard to find and keep the right staff, I'll say. And then a lot of times, when you're just getting started too, you can be wearing multiple hats, right? Some days you're the salesperson, some days you're the scheduler, the operations rep, and so on. And so it can be a lot to manage all that. We're not going to tackle every single thing on this list today, but we are going to kind of tackle, obviously, the planning and forecasting for the coming year, which impacts a lot of these things. So I'll keep jumping ahead here. And so if you are struggling to generate a higher profit, industry average that from what we've seen over the years is probably close to about a 3% net profit. Some people obviously more than that, some people less. It's the average that we've seen over the years. And there's a lot of people that are maybe not as familiar with those certain business metrics that really help you fine tune, where that profit is going. And that's where annual planning really comes in and budgeting, right? So it drives accountability. It aligns your teams. You can set a sales goal for the year and everyone can kind of rally behind that. And without that, it becomes difficult to do the things on the slide here, like understand what you need to set your goal to in order to get a higher profit, or how much can I afford to pay, the top crews, or can I afford to hire another person to my office staff. So that's really where annual planning is going to come in and help you out. And for more on that, I'll jump to the next slide here and pass things over to Stephen.
Yeah, thanks. I want to talk about the strategic planning cycle. And obviously, we have a fancy graph here to go along with it. But it's all important to set up our goals. The goals should be a little bit more defined than just I want to grow my business or I want to make $1 million this year. If you don't define what those goals, like I need to add staff or we need to increase our sales territory, it becomes a little bit challenging to just have an overarching goal like I want to make more money. Um, and then where do you want to go to be able to get those goals? So what are those desired outcomes? Like I just listed, growing our staff, adding a truck, being able to increase the size of your territory, et cetera. You want to then define your strategies. How do we get there? I need to, get my job descriptions together. I need to be able to create like an actual sales plan. Or I need to have templates for my bids and my estimates moving forward. Ensuring that we have KPIs, so measures and targets for that success, and then measuring the results and checking into those. I would say at least quarterly, in order to make sure that you're on track. If you just set your goal at the start of the year and don't check in until the end of the year, likely you're not going to be able to hit your goals there. So we'll talk about some of those things as we go through today's webinar.
And I just wanted to jump in. I forgot a question for Noe too. When it comes to like the annual planning and forecasting, anything else that kind of comes to mind that you'd recommend?
Yeah, I mean, again, it'll all come back to knowing your numbers, but a large part of it is, and again, I think we're going to hit on a lot of this, but it's based on we're talking about net profit. And when I was starting out, I didn't know what net profit meant. So it's, are you making money, right? We see a lot of that money get charged, whether it's credit cards or checks coming in. Are you making money? And you say, okay, am I recovering my cost? Until we actually set a budget, until we knew what our numbers were, we were undercharging for a lot of it, and I know we'll get into that a little bit more later on. So I think that's super important to know when we talk about 3% or what is your net profit. It's all about, are you making money? What is after all of your expenses, after all of your direct costs, what is left over. And that's again when you're accounting for all of that is what are you really tracking it correctly?
Yeah, that's great points. Thank you.
All right, and then yeah, those are great points. I love those, and I know we're alluding to what we're going to talk about shortly, and we're going to get into the meat of the presentation here. But what is the budget? Well, it's the key to your profitability. So the budget is actually going to help you define what the plan is. It's going to give you the forecasted revenue by reviewing your sales, your projected sales, the costs, and your net profit for your business. And what'll this allow you to do? Well, it's going to help impact all of your decisions as you move forward. So we've listed some here on the slide, but how do you plan for wage changes in the middle of the year? Are you profitable by division? Can you see that? And how do you plan to grow that business? Right. Moving on to the next slide there, Jason. Perfect. So the three components of any company budget, but you need to plan for your expenses, so your COGS. What do you expect to spend on wages, equipment, materials, subcontractors if you use them? And the biggest one, which I would say most people miss, is overhead costs. And are you taking those into account when making decisions for the business? Set clear sales goals. I would say make sure that those sales goals are realistic. It's okay to have a what if budget. What if we sell $1 million instead of 500,000? But you want to set realistic expectations and targets. Why? The budget in LMN, if you're using LMN, really is really key. It ends up providing you more in-depth numbers for sure for recovery. And the last thing is the pricing strategy. So I was just alluding to it there, but when you put all those together and you have an overhead markup, you're able to ensure that you are planning for profit and covering all those unforeseen costs to your business. And the next slide there. Thank you. Um, it's important to organize the budget. In LMN, it's actually broken down in a very similar way. So sales, it's the revenue across all of your divisions if you have multiple ones. The COGS, the cost of your goods sold, are your field labor, equipment, materials, subcontracting if you use it. Everybody has overhead, whether you're actually factoring it in or not. We'll find out as we go through today's session, but is usually the crux to most companies. You're not factoring that kind of stuff in. And so our goal today is that we hope that you will leave today's webinar and that you're ready to begin planning a 2026 budget with you and your team.
And Noe, I guess like when you're sort of getting started planning for the next year's budget, what are some of the things that you're looking at or looking for? Is there specific reports you look at or certain metrics?
Yeah, so we start out with our basic profit and loss. So we look at for the past few years, what has been our growth? It generally growth is going to be the same percentage year over year. Generally, you obviously have some years where you hit incredible growth, and we've had that the past couple of years. So that's where Stephen was hitting on being able to have a certain goal and hitting that sales goal or going above your sales goal, right? That's always awesome, but at least if you're being realistic about certain things, and then even with overhead, right? So that's why it's important to be able to calculate what's overhead and what is direct cost, because with if your sales goal goes up, your overhead should stay similar. It should pretty much be the same going in year over year, hopefully. But unless you hit you're planning on hitting that huge growth period. But if your sales are going up, then that's when your direct costs will also go up. And so then that's sort of what you look at when you're looking at the past years. You see what has been a percentage of revenue for direct cost for and again I know we'll get into it, but labor, equipment, what has been that percentage? And that's where Element I think does a great job too.
Awesome. All right.
And yeah, before we jump in this, I think there's one more poll too that we're going to bring up.
What's your
So
biggest challenge?
yeah. Um, and so I know, you just kind of alluded to some of this right now, but yeah, what would you say your biggest challenge is when you were building a profit first plan?
That I didn't know my cost. There were so many things that go into it, and I think it's super important to know that I keep throwing element into it, and I'm trying not to make it so salesy, right? But it's a huge part of it is the fact that every time we go out and give tickets away to somebody, or we buy merchandise that we're giving away to somebody, if we're allocating that correctly, that's recovered in our cost, right? And so then we can put that into LMN. And if we buy season tickets to our local basketball team, our NBA team, we could buy those season tickets, put it into our overhead, and it's marketing cost, but we get to put it in, and it literally will increase maybe a penny for our customers, right? When we estimate something and give it and send them an estimate, it doesn't go up by much. And so being able to know what your costs are and really calculating that back in, that's where it's super helpful. But when a lot of times we don't know what our costs are.
And that's, I know you're definitely not alone there. So I appreciate you sharing that because I'm sure there's a lot of people following along right now that are nodding their heads in agreement.
And knowing your
And
true
there you
job
go.
costs is number one. Yeah.
There you go. Yeah. Awesome. Okay, moving along here. So step one, setting your revenue target, right, for the next year. Setting your sales forecast. Not just throwing a number on the page, obviously, like it's that's easy to do. But you really want to consider things like what's going on in your local market. Obviously, where you're located is going to have a big impact on maybe what your revenue forecast should be for the next year, right? Is there a lot of development happening in your area that you service? Is there anything impacting the type of customer that you target? Are you planning to add any additional services next year? Are you branching out into a different territory? Are you hiring people? Maybe you're hiring a new sales rep. So many things that you just want to think through. Don't worry about getting it perfect. The saying goes, uh, don't let perfection impede progress, right? Something along those lines. But you still want to take those things into consideration, right? So that's the kind of the key part when you're doing this sales forecast. And of course, we don't set these things in stone. We're not chiseling it into stone here. You can always make adjustments throughout the year, like you should. But definitely good to consider all those different variables, like if there is some impact to your business. Um, so as an example, maybe if you break out your divisions like this in Excel to kind of help you visualize things, or, Element, of course. Um, and you've got a growth goal of 10%, right? How are you planning to achieve that 10% growth? Really like put some thought into it. So it all funnels up. Advertising spend, maybe you're going to increase your marketing spend there. So many things that could impact your growth. As long as you have a plan and a strategy for it, that's what's key and kind of the point that I really want to stress. So, um, aside from that, like I mentioned, a lot of different variables between one year to the next, depending on your local area. That we can't speak to everything, but we can at least kind of point you in the right direction as far as things to consider. Step two, budgeting
Yes.
costs. You want to jump
That's going to be
into?
me. I'm also just looking. There's three Q&A questions, but I think we'll leave some of those ones till the end. I saw them come up there too, Jason. I think some of them might have to actually be taken offline. They're very specific, and I did answer a couple questions in chat quickly as well. But yeah, happy to jump into annual planning the LMN way. Obviously, this is an LMN webinar. We will talk a little bit how we do it. Knowing that not everybody uses LMN, but it still works whether you're using one or not using us. So we'll go to the next slide. Thank you. And so I know you actually said knowing your costs. Noe was the number one thing to you, and it was 34% if I had that correct based on the poll summary as well. But yeah, knowing your costs is key to ensuring profitability. We refer to COGS as those costs there. So field labor, materials, equipment, overhead, and subcontracting if you use it. And then what we really want to establish, and I think we were just talking about this a little bit, Chris, in the chat, is how to set like a goal, a profit goal. And so in this example, we're saying 10% is the profit goal. But what we also advise is to beat that by about 10% above that. Reason for that is there's a bunch of things that happen kind of throughout the year that will erode your GP, and you need to be prepared for that. So if you were to set it at 10, and those things happen, you may actually only finish the year at 3. So that's just a tip for advice there as well. Um, And then, yes, when we're talking about field labor versus what is overhead, just to be able to clearly define the two. Estimated field is field labor, so that is a cost. Those are people that are going out and doing the work. And then when we look at non-estimated, so maybe an owner's salary, a CPA, an admin, we would put that type of a cost in our overhead. A lot of folks aren't doing that today, and that's critically important to make sure that those cogs are covered. Um, Equipment. This is still me. Yes, equipment. And so why do we budget for equipment? We want to ensure that in LMN, and you should be doing this as well, is that you want to recover a fair cost. What does it cost to operate that equipment, as well as the depreciation of it? So like we're thinking, fuel, repairs, unforeseen maintenance, and then obviously the depreciation of it, and trying to take into consideration that at some point you're going to have to replace that, mower, that blower, or a truck. And a lot of people don't take that part into consideration. And then the next slide here, 100%. So yeah, most contractors don't know how to plan for replacement. And so you have to ask yourself questions like, am I charging enough to recover this equipment? And if I need to add another truck because I'm hoping to make sales, how do I do that? Is that can impact my bottom line? Is that can impact my gross profit that I've set as my goal? And then other things that you want to consider is whether you own the vehicle, whether you have financing for it. Do you pay interest rates? Are you paying like a financing rate? Is it a long-term rental? And obviously your return on the investment as well. So that depreciation.
Awesome. And as far as materials go, yeah, materials is one of those things that obviously you want to account for the cost of them. Um, but in addition to that, like how are you tracking the change in the cost? So some things to look out for here. It was touched on a little bit, but Noe mentioned it. Is your sales revenue forecast increasing? Then the percentage of revenue that your material cost makes up should stay relatively the same.
Mhm.
So, if materials are 20% of your sales and you add more to your sales line, that percentage is obviously going to go down unless you increase that amount of material. Other things to look out for, some materials have rising costs associated with them. I've heard a lot from customers about fertilizer, salt the prices can fluctuate there. You taking those things into consideration as an example.
Yep.
Um,
Especially when they sell it as salt.
yeah, that is not helpful. uh, um, but in addition to just forecasting, it's like how can you look at what you're spending on materials, and is there a room that you can drive that cost down, without obviously sacrificing quality, right? So a couple things here just to throw out. Competing with vendor pricing, getting multiple bids, building vendor relationships obviously can help. Inventory systems like the 5S system. That can help you organize your materials that you have on hand, so somebody's not ordering something that you've already got, or they're purchasing a tool that you already have, right? um, Ordering in bulk and standardizing your materials, so reducing like the total number of SKUs if you can that you order, so that you can order like larger quantities and save on discount volumes there. And then obviously like probably the big one is training and reducing waste, right? So you'll plug in Greenius here if anyone's using Greenius for training, but um, Greenius being our safety and professional development, landscape and green industry training courses. But really training your team on like reducing material waste, right? Those costs can certainly add up and kind of eat away at your profit, and that could be the difference between a 3% net profit or higher at the end of the year. So Noe, I mean, I'll ask you, I mean, is there anything that you're looking at like year over year when it comes to materials that you'd call out specifically?
Yeah, I was actually going to say I was going to jump in. So one of the
Exciting.
best things that we found is, especially as we start growing more into the commercial market, right, where we're doing more homeowner associations or condominium associations, is that a lot of that pays net 30, right, or sometimes even longer. And so it's not like residential where you get paid immediately. And so a lot of it we're doing mulching and there are cleanups and mulching. We're putting all this material down, but we're not getting paid immediately. But so that's where it's really important to be able to set up those relationships with those vendors. And so with LMN, we are, it's connected to Site One, and so we can update pricing. So we already know what our pricing is going to be. But to be able to, once you start ordering enough material through them, you start reaching out. They have account managers, and sometimes those account managers will even offer certain discounts that will go below what everybody else is getting, because obviously the more you purchase, the better pricing they give you. So we've found that building those relationships through, and sometimes they'll even extend those terms, right? So it's extending the terms where it's not just net 30, sometimes it'll be net 60, and they'll even lower the pricing. So it helps us to be able to help our customers as well. I think that's super critical, and you can't forget that. Like it's so helpful to have those relationships.
Yeah, that's a great tip. And yeah, cash flow is very much a part of planning, especially when you get into spring cleanups and material costs and stuff like that. So that's a great call out. Moving on to subcontracting. So obviously this is only relevant if you use subs, but if you are, and I've spoken to a couple, younger folks getting into landscaping, maybe newer businesses that are considering whether or not to use subs. And so um, just worth mentioning and calling out, on the surface, it can seem like a really good opportunity to use subs for, as much as you can. It can lower, there's like some points here. It can lower your overhead, increase your revenue pretty easily if you can find good quality subs, less equipment risk. But obviously, there's risks involved with subs too, right? So, snow, for example, it's snowing here today. If your sub doesn't show up to a site, you still have to manage that site, right? So, um, you know, inc- factor that into your preparation and your planning if you are considering using subs and you're not now. Dependable, like good, reliable subs. If you can find people, are great. If you have those relationships, but if you're just getting into it, it's not free money. There's a lot of risk involved with subcontracting workouts. So just something to call out and be careful on. Noe, do you guys use subs at all?
We do. We try to limit it just because for the exact same reason, right? So we have our way of working, and we're known as being very high end for the sort of work that we do, and not everybody has those same standards, so it risk it. We use our subs definitely a lot more for snow, where it's we're out there and exactly what you said with the equipment risk, right? So it's the plows, it's the stuff that we don't use very often. We used to do it a little bit more for masonry, so like the flagstone and pavers and all of that. But once we built it up, then we brought it in house. And so that's another thing to look at also when you're doing your budget. Is at what point do you decide to bring things in houses? Is that enough of your income that it makes sense?
So I guess what are the kind of some of the things that you look at when you're trying to decide? Are you like looking at the profitability of doing it in-house versus using a sub or
For me, it ended up being a little bit of control, but what
Mhm.
we did is we started calculating. Yeah,
Yeah.
no, we started calculating it is we looked at what was the revenue from hardscaping, and we looked at how much we had to pay hardscaping foreman, what the hardscaping assistant would be, and we put that into literally, I mean, the calculator on Element to see what our with the overhead and everything, what our cost or break even cost would be, and then we had to charge enough for that. So once we did that, then we started estimating, and we had to see if okay, what doesn't make sense for us to hire somebody to do it, and then we felt it did, and it's been pretty successful for us since we did it. But again, that's another case where we didn't know what our costs were. For the subs, it can be a little bit more direct. You just whatever they're charging you, you think that's fine. But with everything else, if we were before LMN, when we were trying to hire somebody and doing everything, we looked at their cost, didn't look at maybe didn't even include the labor burden, and we were just looking at that as our cost, and we figured that was our break even. We weren't trying to recover overhead.
Yeah, that's a great call out. And I mean, it looks like we've got some LMN customers in the chat, so that's great.
Hmm.
I'll call out that, yeah, you can create like a copy of your budget in LMN
Yep.
and for like the like what if scenarios, right? Like what if we're going to use more subs next year or less subs, and what if we're going to hire that in-house and kind of create copies of your budget. So just a tip there for customers that are on here.
Yeah, and before you, I know we're gonna jump into overhead here in a second, Jason. There was a question in both chat and the Q&A that came up with the 5S system. I know that we don't have any slides. We're not really diving into that today, but it does come up quite frequently when people mention materials, and so I'm happy to answer the question just really quickly. But it stands for sort, set in order, shine, standardize, and sustain. I think Joe, you asked the question, and somebody else in chat. When it comes to materials, I mean, it's just about getting lower production costs, less waste when you're ordering plants, lower defect rates or, issues with plants when you're ordering them. And there's a lot of benefits to implementing a system like that, but it's not necessarily tied to budgeting. It's just another system that business owners would deploy to streamline everything. The way your trucks look means that your guys aren't looking for stuff every single day, which leads to less waste, things don't get broken, et cetera, et cetera, et cetera, just to kind of give you an example of what that system would look like. And I'm sure Noah, you deploy several systems across your business, but that might be one of them.
That's the Toyota system,
Yes.
based on continuous learning, Kaizen. Great book
Yep.
for anyone interested. But yeah,
Yeah, it just came out twice, so I just thought we'd answer it really quickly and not leave that one till the end.
cool.
And then yeah, I think we're jumping into overhead now, right?
Overhead.
So yeah. Overhead slide. Oh, sorry. Perfect. Yes. And yeah, so when we, I was busy looking at the five S's. But yeah, when we get into overhead, I touched on some of this stuff already, but overhead can be a ton of things, and guessing overhead can kill your business. I know Noe can speak to this, and he probably will in a little bit. But it's the biggest difference between businesses that stall and businesses that grow. And customers who have a handle on their overhead and what it actually does to their business, what it costs them are people who are planning. And that's the whole reason why we're here today is planning to make profit in 2026. So if you're not taking things into consideration like an owner's salary, then it makes it very, very difficult for you to pay yourself. If you're just paying yourself from your profit, that's not really paying yourself. And so you're not planning to pay yourself. You're just hoping to pay yourself. All right. And so just want to call that out. And this is not a hope. This is a plan. You have to plan to pay yourself. You have to plan to pay for advertising. You have to pay for your rent, uniforms, cell phone bills, your LMN subscription if you have one, a CPA or your QuickBooks account, all those things that you can't charge directly to a customer because they would ask you, what the hell are you doing if they saw that on an invoice? Right. So that's what overhead is.
One big thing that I have to throw in there is training. We spend a lot of time on training,
Yeah.
and I think it's one of the things that not enough people spend on. And so when you put training into your overhead, you all that time that you want, I mean, you want to have the best people, you train them.
Yep.
But how do you pay for it, right? You have to pay for it out of your overhead, and it calculates it back in. So that's super important to keep in mind.
Yeah, and John asks a great question. Curious if you'd consider an operations manager as overhead or field salary. Well, if that operations manager is not physically going out and doing work on the job, and you can't add him to a bid or a proposal, then absolutely he is overhead. He or she is overhead for sure. If they go to a project to tap, the crews on the back and say, "Good job, you didn't miss doing this," that's not being productive. Those are not hours you're selling. So those hours need to be recouped within your overhead salary section for sure. A great question, John. Thank you. Yeah, we'll move on to the next one here. And yeah, so again, what's is this me? I think
I'll
this is the
Yeah, I'll jump in.
okay. Yeah, you go ahead.
So yeah, just like what is overhead, what is not overhead. We kind of alluded to this, but
Hmm.
things that you are including on an estimate, right? So if you were providing a detailed quote to somebody that showed everything that's making up your estimate, if you had advertising on there, obviously that is at overhead, so you're not going to
Yep.
put that on your estimate, but things that you would expect to see on an estimate, your field labor, equipment, materials, subs, these are all the costs of doing business, right? And why does this matter? Why do we separate them? Separation helps when it comes to overhead recovery, right? So knowing how much, sorry, I got something in my eye here. Knowing how much you need to mark up your prices to account for the overhead that you need to recover, it's good to have an understanding of that separation. what am I including on the estimate? What am I not including on the estimate? Because those costs that I'm not including, I need to somehow work into my pricing. All right. LMN does that, like systematizes it and does it automatically for you when you're doing your estimating. For those that are not on LMN, part of the handout that we're going to be sending out with the recording from this webinar will include a formula that you can use to calculate an overhead recovery rate to kind of like mark up your prices. To give you a rough idea of like, what you should be charging per hour based on how much overhead you have. It's not like a percentage that we can just tell you mark up your costs by 50% or, you know, set your price as materials times 2.5, right? Like those types of things aren't going to get you like an accurate price for just you. But if you're using LMN, you're using like the Moore's system as an example, that's great. If you're not on LMN, check out that handout and you can do that calculation manually. So moving along, annual planning, so now you've done your planning, you've done your forecasting, right? It's time to execute, track your progress. There was a good question in the Q&A I wanted to bring up. John was asking kind of when do you need to know, like when do you know that you need to add additional labor? So it's like if you're a small business, it's almost like a catch-22. If you hire too early, then you've got people with idle hands, right? If you hire too late, then you're trying to catch up. Noe, I was going to toss this one to you. Is there anything that you look for when you are planning to hire, like any cues that you kind of try to pay attention to?
Yeah, I mean, so we look at what our revenue per hour is, right? And I think that maybe is one of the slides that's coming up is we talk about labor hours, right? So we look at how much we're going to be bringing in, what we've sold for next year. A lot of we're very heavy maintenance, so it's hard to be able to say, what are our projects for next year because a lot of it is, we sell 3-year contracts, and so we know what, we've got a contract starting in January that we've sold in July of 2025, right? So we can plan a little bit easier on what's supposed to be taking place for next year. But in terms of what our revenue is going to be for next year, what is our labor hours? I know that there's a certain amount that you want it to be, and it depends on whether that's going to be design build or whether it's going to be maintenance. Maintenance is obviously a lot lower than design build, and I know you guys will hit on that a little bit later, so I'll leave that for you guys. But that's one of the ways that we look at it.
Nice. I would yeah, I would add to that too, like what's your team's capacity looking like right now? Um John, I know you're on LMN there, so like one of my favorite reports to run or to show people is in the analytics tab. It's called estimate item analysis. It's a great one. It'll show you how many labor hours you've sold, right? So you can kind of compare that to how many hours that you have. Obviously, if you're coming up near capacity, so even if you're not on LMN, if you're looking at how many hours that you've sold versus how many hours do you have available, like how many field staff do you have, and how much other time is accounted for already on jobs that you do have. That if you're operating pretty much at really close to capacity there, that can be your cue that it's a good time to hire too.
Jason, and that may be sort of the same thing, but that with the utilization rate where we look at how much time is drive time or how much time is shop time, right? So I think that is one of the things that we use as our KPIs. And so when we look at that, if we feel like that number is way too high, well, we say, okay, well, maybe we can split it up, and maybe by adding another driver, we can do a little bit more work.
That's a good segue because yeah, another way that you can kind of look at these types of things too, like you mentioned, I think you mentioned this earlier, Noe, with like the ratios. These are great for like quick check-ins. So like when you actually do your budget and you're trying to track how you're executing towards your budget, um, again, like look at what you forecasted or what you've planned to spend on labor for the year and what your sales goal is. Divide those two together. So if you're planning to hit $1 million in revenue and you're spending 250,000 in labor, then your labor is 25%. Well, as you move throughout the year, check how much you've spent on labor versus your sales to date. Are you close to 25%? Are you at 35%? Hopefully not. if you're not expecting to at least. Are you, 20%? That could also be a good indicator for someone that's like looking at capacities, right? Maybe you're expecting your labor to be at 25%, and because you're doing so much more in sales, it's closer to 18%. Now you kind of know you've got some wiggle room there. So you can kind of use these ratios. LMN, again, not to plug it again, but we'll give you those ratios right in your budget as a percentage that you can look at to see. But even if you're not using LMN, you can do some quick division there to use those ratios, identify if you're overspending in any category or underspending, right? Insights into efficiency, and decide where you're going to invest your time. Obviously, like the example I just mentioned, if you're expecting 25% ratio on labor and you're at 35%, well, you know where to dig in, right? You know where to look to see what's going on. So, and then beyond that, a couple KPIs that we can look at that Noe mentioned. First one being revenue per labor hour, revenue per man hour, whatever you want to call it. When it comes to like your budgeting plan, this would be, total sales for the year divided by how many hours that you forecasted that you're going to use for that year. You can also look at this at an estimate by estimate level, of course, too. So it's like the total price of a job that you sold divided by how many hours of your labor hours are on that job, so not including subs. And just to be clear, this is not what you should be charging per hour. Like this is the total price of a job or total sales revenue goal for the year divided by the labor hours. And why this metric is good. One, it's kind of an easy to understand metric that scales across, sales, operations, scheduling. Like everyone can kind of get behind that. Okay, our goal is to achieve $150 of revenue per hour for our design build division, right? It's fairly easy to understand. It reveals a lot about lost opportunities, right? If there's a lot of inefficiency going on in your business, you'll see it in the revenue per labor hour metric. And so it's a good indicator of like where you have a lot of opportunity and where you have a lot of potential, because it's also something that you can easily benchmark with other landscaping companies in your area. And speaking of benchmarks, we've got a couple here. And again, I just want to reiterate, $150 per labor hour as far as like design build goes. That's like total price of a job divided by how many labor hours are on that job. This is not me saying that you should be charging $150 an hour, just to be clear. And these are going to depend on your market as well, right? So if you sell to like a really high-end clientele and your materials that you purchase are really expensive, you might be shooting more for like $250 or $300 an hour. And if you're in like a pretty rural area, maybe you're shooting for $100 an hour. So there's flexibility here. Anything, Noe, I saw you come off mute there for a second. Anything you want to add in?
Yeah, I was going to say, so from the landscaper perspective, so what that means is, so that is your labor, that means your truck, that means your material, everything that goes into that job is going to equal that $150 per hour, or yeah, again, whatever it is. Like you said, if it could be something as simple as, are you selling Nico Lock pavers, or are you selling Techo Block pavers? Are they a little bit more expensive, right? So um, it's that's probably the best way to look at it. With maintenance, the reason why maintenance is going to be a lot lower is just because you're not putting material into it, right? So uh
Oh, it might have froze a bit there.
Yeah, I think he might have froze.
Okay.
that's why that revenue
Cliffhanger.
per hour. I was just
Oh,
going to
there you
say,
go.
from the land speed, I think the material that goes into it.
Oh,
Yeah.
sorry. Your connection
Did
broke
it
up
did
just
it
a little
connect?
bit there. Yeah,
Disconnect?
you left us in
Oh,
suspense
man.
on your
I'm sorry.
answer.
I was just going to say, as the landscaper, when I'm seeing that where it goes 150 per hour, I'm like, wow, 150 per hour. But it's, again, you have to make sure that that's including the material and everything that goes into it. So it's all of that. And especially being a very maintenance heavy company, it it seems weird that we would be charging less, but it's, again, we're not putting material into it. So
Yeah,
that's strictly labor and a little bit of equipment, right?
absolutely. Yeah, I mean, that's a great call out. The reason there's such a huge difference between these two is pretty much materials, right? Material makes up the bulk of it, and it also depends what you classify as maintenance for sure. Like a spring cleanup with a ton of mulch, right? Do you classify that as maintenance, or is that an install to you or an enhancement, right? So there's definitely variability there, but you're dead on the nose with the difference being in the equipment and materials for sure. Good call out. And we've got another KPI on gross profit. We actually had a question on that too.
It is, yeah. It was what is a good gross profit to shoot for? My GP has been around 40%. But then this year we did over double what was budgeted in subcontractor work, and I had to hire a lot of subs, especially on the bigger projects. This affected my GP by roughly 18%. How do I budget for that next year?
As far as what to aim for, I mean, gross profit wise, personally, I think I hear anything from like 40 to 60% as kind of
Yeah.
like being a range that people aim for, or maybe closer to 50. It also depends like what you classify as a cost too. Like if you put all your equipment in overhead, or if you keep your equipment as a job cost, that's obviously going to have an impact on your gross margin percentage. The type of work that you do can have an impact as well. So it's a pretty wide margin that I'm kind of giving you at 40 to 60. Um, but because there's so much variability, those are kind of that's the range that I
Yeah.
hear a lot about.
Yeah, and I know Noe, I was gonna say you didn't have to mute yourself because I know that you wanted to talk on this slide here as well. But um, I would say, Jason, yeah, usually I hear 50%, especially with folks that use Leanscaper and some other peer groups out there. Um, and I would also say this goes back to the one of the original slides where we talked about how we had our COGS and then we had like our plan for profit, right? And how things happen, Joe, where they erode that profit. And it's always good to kind of have like that buffer. So like we said, aim to have like an additional 10%, right? And in your case, I think you said it jumped up from like 8 to 18%. And that's how you have to cover yourself, right? If you don't plan to have those unforeseen things that are going to happen in your business, then it erodes your profit, right? You'll be left with nothing, or sometimes, maybe even lose money. And so easy to say, but 50% is what I hear, to Jason's point, 40 to 60. And so, Joe, if you had, targeted 40 as your goal, but then left yourself that buffer of 50 as an example, there may have been that wiggle room because you had to hire so many subs because you got so busy, which, I mean, being busy is a good thing. So, for sure. But no, yeah, any insight into like what you do for GP as a KPI?
Yeah, I mean, I was going to say, so same thing, right? So what we were just talking about with the labor per hour. So if it's design build generally has a higher gross profit than maintenance, from what I've seen across the board. And we have the same thing. We go through all of our projects, all of our install jobs, and we go through and say uh, we want to have a minimum 50% gross profit on each job. We go through the job costing and make sure that our efficiency was on point so that we weren't over 115% in that little, I guess, scorecard that shows up in Element. And then
Yep.
we also do the same thing with the gross profit. We put in all our vendor bills, and then we look at that and say, okay, where are we on track for it? And so now once we actually knew our cost, we're so much better at it, and now we're looking a lot more profitable.
Yeah. Yeah, and I mean, again, I think the overall total will vary for people as well. I'm also seeing the chat here. I was going to answer this one question, Jason. People asking if the industry averages in LMN in the budget section are accurate for specific location. The answer is no. They don't take location into consideration. Generally, it's the size of the business, so the breakdown of sales percentages. So like 30% maintenance, 40% design build, 10% snow and ice, and then your overall sales goal. And it matches you up to other companies that utilize LMN in those particular boxes. And so that's where those industry averages come from. Dean, they're meant to be mostly a guideline. And to some other people's points here, you can definitely find some other benchmarks outside of LMN if you're trying to find comparables for sure. And then I think in the Q&A, when we're on the conversation of subcontractors, I use subcontractors only. I charge by the day, pay by the day, not even by the project. I haven't been having them clock into the job because I ultimately count days instead of minutes. How can you track revenue, productivity, and KPIs to make sure I'm tracking appropriately. It's difficult to know how to measure. Element is geared around revenue per hour, but she's not using that. Is there another KPI, Noe, that you might be able to recommend?
I'd say probably cost. I mean, so if you're using subcontractors and it just comes down to cost, right? Like what you could look at there's a few of them, right? So what was your capture rate for trying to get that job, right? If you're looking at sales, for budgeting, what did you actually spend on it? If it's pure subcontractors, they're putting all the materials and everything. Um, what did you actually make on it, right? If it's put into your budget, I feel like, I mean, it sounds like you're profitable if you're putting it into your budget and then it's hitting a certain amount of gross profit, right? But I'd have to know what the numbers were on it.
Brent
And
says she just covers the materials.
I'll jump in and say too, I know the question mentions elements geared around revenue per labor hour, man hour. There's actually a throughput as well metric.
Yep.
And throughput is essentially what's left over after you've paid your vendors. So for someone that uses a lot of subs, the throughput an hour, if you are using Element, it looks like you are, would be a good one to check out. I'd recommend that.
Yeah, and then the last one on KPIs was when calculating revenue per labor hour, are you including drive time hours, loading, unloading, in the morning and in the end of the day, hours spent working on equipment to winterize it, et cetera? How are you calculating that revenue per hour? If anybody's got that, I was going to say like generally we don't factor that into the revenue. Like we're doing that in the unbillable percentages, both in our budget and in our labor rates. A lot of customers don't know their unbillable percentage, so but those all sound like Polly, like those are unbillable hours.
Yeah, I would just say it depends how you come up with like the price that you charge per hour.
Yeah.
If you work that into your field labor rate or not. And that's what I would kind of
Yeah.
suggest is if you are putting it in as like a break-even cost of part of your labor hour, then it's already included there. And I know we've got the last slide here, and then we'll jump back into the Q&A. But obviously, holding yourself, we built a plan, execute around the plan. Stephen, anything that you'd add as far as like the strategy and the execution?
Yeah, I mean, great question. I know we were gonna have a poll come up here in a second. But I mean, it's important to make sure that you set your goals. I mean, and that there's the poll. There we go. You can definitely answer that, and then I'm going to keep going here as well. But you need to track the goals. So you need to set the goals, you need to track the goals. We need to know if any jobs that we have are not making us any money. So we call that job costing. Or if we need to know if some of our crews are being inefficient, right? And so having ways to track that, again, estimated versus actual costs, is critical for that. Maybe understanding what clients make money and where you make the money, and so being able to do an analysis of what type of work you do, that's highly profitable. If you're doing a lot of low value work, maybe you should stop doing it, right? And we know
Yeah.
companies who used to do snow plowing that are like, nah, my margins were too small, and I don't do that anymore. I leave that to the small fish, and I'm going to focus on what my crews and my teams are really good at and things that are highly profitable. And so that's important as well. And then making sure that you're able to get that data and that real-time insight, daily, weekly, monthly, and year-to-date performances, and that you don't just get the data, but that you're reviewing it with your teams. I think that that's something that we're not really touching on in here, but being able to give that data to your team so that they understand like why you charge what you charge, why you're doing what you do, and they can be part of that planning process. Right. So don't suffer in silence and definitely work with people to track these KPIs and these goals.
Great points. So we've got some more questions. It looks like there's one I wanted to call out. Maybe to kick us off here. So we talked about queuing, like what are the cues to look for when you need to hire and plan around that. But from a budgeting perspective, we talked on ratios. So how do you budget the plan to hire? You can actually do the inverse. So like if your ratio that you're aiming for, say, is 25% of your labor spent on sales, then you can do the inverse, right? If you're hiring, say you can divide that divide it by 0.25 to come up with like the sales that you'll need to hit. And if that looks like totally out of whack, then that goes back to like the whole strategy and planning around like, if you're adding another crew, do you have the capacity? Do you have have you made the sales? If not, how are you going to get there? Because if you do the division, it'll tell you what that number should be for like your sales goal for the upcoming year. It's kind of like an inverse, but we can follow up after this too if you need more information there. Good question here. When calculating gross profit, what things should be included as cost of goods sold and deducted before figuring gross profit? For example, should truck expenses be taken out first?
Yeah.
So yeah, go ahead, Stephen. I was going to say
No,
with
no, no.
Element,
Go
we
for
do
it.
it. Yeah, no, with Element, I mean, we calculate into it because all those trucks are going to the job, right? So we do it in Element with that. Um, but you can, if you have to replace it at some point. So we do. We when we do our job costing, it's changed the entire way that we do our estimates. When I shared with Stephen not too long ago that when we look at sharing our job cost with people, right? Like if I have an estimate that goes out, I have no problem showing them our break even and saying I can't go below this because I used to be able to pull up an estimate and I would think that if a job costs $2,000 or a direct cost were $2,000, I thought, that at 2,500 maybe we were making money, but now with LMN we look at it and our indirect costs end up pushing it up to 2,750. If I would have charged $2,500 for that where my break even is 2,750, I'm throwing away $250, right? So to come out without making any money at all, to be at 2,750, then I now know that. But I can also share that with somebody. You have a best friend that always says, well, hook me up, help me out, and they expect it to be a lot less. And you're like, look, I cannot go any less than that.
Hmm.
It's so helpful to know that. But a lot of that is also the vehicle cost, right? Because at some point, if that vehicle breaks down or whatever, you have to go rent another truck just to go help that person out. It's a cost that you then had, right? So you have to look at it that way as well.
Yeah, I love that. And I would just say that on the flip side, you said that you share this information with customers, right? Sometimes when you're trying to bid and you can show them the break even. And I think as a business owner as well, it's allowing you that transparency, which is critical to know how low you can go to become competitive as well. So factoring that into your GP and into the way that you bid makes absolute sense for sure.
We've probably got time for one more question, then we got to wrap things up. Noe, I'll throw this one to you. Someone's asking any tips basically for creating a budget when they're going into their second year. So if you were, new in business again, any tips that you'd give someone kind of just starting out with limited history to kind of draw from?
Yeah, I mean, I will be honest with you. To get it right, don't worry. I think you said it earlier, is don't worry about trying to get it perfect because if you are going to try to aim for perfection, you'll never get it. We make mistakes all the time still. We work into that budget. I think maybe a month ago, I was still working on something in our 2025 budget to try to get the cost exactly where I wanted it. So even at the end of the year, I was still messing with it. But it I would say try to get as much information as you can. If you have any information, right? Like how much did you spend for your mulch? How much did you spend for your soil? How much did you, if you're using a truck, how much, what look at what that cost for that truck is if you have to buy it new, put that into it. Um, Try to get as much information as you can. And if you don't know what your sales are going to be, that's okay. I would even say it's funny. We were looking at the way the slides go. I was even thinking I would start with our cost first and then build it back up to what my sales can be so that I know I can be profitable. Be like, okay, I have to sell that much just to make this worth it. And even your overhead, make sure that you put whatever you want to pay yourself, as long as it's making sure it's reasonable. But in your overhead, make sure that your salary is in there, and um, that way you can work back up. Make sure that it's not, you don't have a negative profit based off of everything. So you say, okay, this is how much I have to sell.
Some great tips. All right. I know we're pretty much right on time here, so Stephen, I'll let you close this out.
Yeah, so at the end of the day, I mean, we did provide a guide here. I think they're going to email it out afterwards, but it's also available in the Zoom. So or those of you that want to find the resource tab there, be able to download this PDF. If you have any questions, we would love to chat with you. If you're a current LMN user, you can reach out to me. I did share my email just a little bit further back. You can also email us at lmn-community@granum.com. That email address there is to help out current customers, but we're also happy to answer any questions that you have about the software as well. And then yes, I don't know. You can touch on this offer slide here.
Yeah, if you're not an Element customer, you need help budgeting, as an example, or anything that we have to offer there, just by booking a meeting to meet with our sales team, we'll top up your gas tank. So we got awesome offer there, and some year-end savings going on. So feel free to scan the QR code to book a demo, and someone from our team will be in touch. I just wanted to thank Stephen and Noe as well for joining me today. Thank you to everyone for attending. I'm sure we could keep, at least I can keep talking about budgeting for forever here, but we're at time. And so I just want to say thank you for everyone that joined us today. I really appreciate it.
Yeah, happy holidays, and hopefully we'll see you guys soon.
Yeah, thank you, everybody. Happy holidays.